Unfiltered opinions.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
And in our deep dive this week, we are diving into how to unlock South Africa's economy, understanding that we have some challenges that we've been facing, but perhaps there are some interesting and innovative ways that we can approach some of these challenges to see if perhaps we can do a little bit more. We know that this has been something that has come up a lot. And we know that we've spoken about things like 100 billion rand transformation fund. We know that we've spoken about policies that haven't worked in the past and whether or not some policies have delivered as they have expected to. I think the reason this dive comes up for us is the fact that we've looked at some really interesting and innovative ways to boost some spend and some market activities and all of that sort of stuff. And when we looked at the Formula One thing, we said the Formula One business model can be extremely profitable for everybody. It can have more social benefit. It can unlock tourism. It can unlock all sorts of other additional benefits there. But often we found that these sorts of initiatives, and this is the challenge again with something like Formula One, require an enabling environment. And we haven't exactly had the most enabling environment from a South African perspective. And perhaps that's it. That's what we're looking at, is how do we have the South African environment be more enabling and more conducive towards people participating, right? I think a good starting point is something you've mentioned in the past, Si, is having tax breaks, tax concessions to say, if you operate this kind of business, this is the tax break you get. I mean, when we launched solar panels and we tried to get private use to pivot towards solar solutions, there was 125% tax incentive for the installations and all of that sort of stuff. So tax breaks are a good way to do that, to stimulate people or to actually redirect people into a particular sector or a particular area to work in, but that doesn't solve the problem necessarily. That's one incentive.
That's a good point. And it doesn't solve the problem. It just tries to make the problem a little easier for third parties, i.e. investors and the like, to kind of make it happen. You still got to make it happen. And that's the thing.
So how does that happen in South Africa, where things like the construction mafia that supposedly exists out there are being allowed to operate the way they operate without any real recourse, I suppose? Whether there is recourse, whether there isn't, whether some of the claims are legitimate or not, it's a factor you have to contend with. If I am a construction firm, a WBHO, or whoever I am, depending on the project, some of the projects I abandon or I don't even pitch for because it is too much of a headache to have to deal with, right? So one can't really say that these sorts of things don't affect us. And
that boils down to rule of law, which again, there's a few things that you want for an economy to grow. Electricity, nice one. Rule of law is the other. And you talk around a construction mafia. That's just rule of law, surely. I mean, it's like a case of you don't get the right to go to a construction site and demand your 30%. It's like, no, I mean, join the queue and get a job.
So how do we, I think a lot of the conversation that's happened in South Africa is conversations around redressing things of the past. And that came up again when we were looking at those lease agreements with the likes of Killarney Country Club and all of that. So that is something that is pretty much ingrained in South Africa's DNA. We don't have an equal past and we don't come from an equal past environment. But as we've shown with some of the exercises that we've done, and I think back to the Stokvel conversation that we had on our show, which we'll revisit, folks. Let us know your thoughts around that as well. The Stokvel conversation, to say you can effectively create buying power out of thin air if you have a proper plan and a consolidated or a concerted effort rather to achieving this, right? But then once we have that, this is where the deployment comes in and the implementation side of things, right? So if we are to look at making the South African environment, economically speaking, a bit more attractive, tax concessions is one point there. I think what we can also add to that kind of conversation is perhaps funding and financing. It's important to look at that, because in as much as we talk about, these sorts of initiatives are great, or I understand that there's some initiatives that have to have a social benefit, and so it's a social spend, but I feel as though there is not enough that is being put into creating new ventures, venture capital, and unlocking actual business ideas. There are plenty of business ideas out there that, if given a bit of legs, would be able to run. But the unfortunate part is nobody wants to take the risk. The banks don't want to take the risk. The private equity firms and the hedge funds don't want to take the risk. The government says they want to take the risk, but they all end up funding the projects that don't make sense. I mean, how else do we explain that some of the projects that were funded? I mean, I'm looking at, for example, I read something about an IDC project to build boats in Kenya. And the boat company sits in Kenya. They were supposedly going to buy the boat parts from South Africa and then go build these on-water boat resorty thingies in Kenya. The IDC financed that sort of deal to the tune of several millions, and that deal didn't go as planned. And you look at innovations like that and you say, okay, but should we then not be deploying money into South Africa first before looking to deploy into other countries? Now, I get that we can talk about the fact that we need to diversify risk, and South Africa might be a concentration risk for an IDC, but you're an organization that exists in South Africa. Should we not be solving problems at home first?
Yeah. I mean, we absolutely should. Look, to be clear, investing in any business carries risk. That's just the nature of business. We're not uncomfortable with that. But I mean, should we be? And I know, for example, that the IDC does do some offshore stuff, and I appreciate that. But I do take the point that maybe we should take our risks at home, because if you invest into a venture and it goes bust, okay, you've lost. There has been some auxiliary activity around it. There has been some money spent that then goes into the broader community and economy. Not, love me some Kenya, but not helping if it's in Kenya. But it is, and to the point, and it's always a case of, it's chicken and eggs. Banks don't want to fund it until it's provable, and then you don't need the bank, etc. It is really, really hard. And I think there's small things. For example, practically registering a PTY now is literally a 20-minute exercise online, boom, bang, done. That's a huge change and incredibly important. But there are 100 other components that make it very difficult. For example, our VAT threshold remains at $1 million. If you do $1 million revenue, the first month you think you're going to do $1 million in a calendar year, or in a year, I think it's a tax year, you need to register for VAT. It's a pain, but it's been $1 million for 15 years. That should be 2.5, 3, 5 million. We should make it easier for those smaller. And again, that's the enabling environment. In this case, it happens to be around legislation. In this case, particularly on when you need to register for VAT.
Speaking of legislation, the Department of Mineral Resources and Energy, the DMRE, that's responsible for minerals licenses and mining licenses throughout the country, they came out with a unique proposal to perhaps adjust and amend the legislation that we currently have to incorporate things like artisanal miners more so, and perhaps find licensing for artisanal miners. I spoke to a mining expert around that, Peter Major, and he mentioned...
Yeah, you spoke to the mining expert.
The mining expert. Yes. And Peter Major, actually, I asked him his thoughts around whether or not that's a good plan. And he said no. He said, mining is an expensive exercise. Why are you trying to encourage small-scale miners that are not going to be able to meaningfully contribute towards the scale of an operation? They're going to mine for themselves. They're going to mine in small bits and batches. They're not going to employ too many people around what they're doing because their businesses are not structured in that way. He said we should be looking at encouraging huge capital investment to come into mining, because the moment you put down hundreds of millions of billions into the mining, then you start to be able to create more jobs, go further into the mining exercise. And we just spoke about the saying that mining is not a cheap endeavor to go into. And I suppose when you look at it from that perspective, the age-old argument that immediately comes up is, but then the resources are extracted and taken out of the country and we don't benefit from them. And again, that's where the beneficiation conversation comes back.
Sure, but that's the beneficiation. I can never say that word. That's where people are making the jewelry. Whether you're an artisanal miner or a top 40 miner, the point is that you're selling it onto the market and taking the best price you can. The wanting to make the jewelry local in South Africa is another whole different debate, and it's a debate our government has been having for over 20 years and made very little. I think it's Italy which exports more gold than we do. Mm-hmm. They don't mind gold. They bring it in, they make it into stuff, and then they export it.
So we've looked at the direct tax incentives that can come from it. We've looked at the fact that you need regulatory reform in the form of legislation or however it is you want to look at it. Mm-hmm. But there are some other unique things that we can do. And I want to bring up the evergreen leases, right? Mm-hmm. Because part of the comments that came out as well, when we discussed the Kyalami conversation in the episode that we did, was that places like that create jobs, and therefore you're better off having a Kyalami there, even if it is on a low lease agreement, because the auxiliary benefit of the amount of jobs they create and the amount of contributions that they make towards their little ecosystem makes sense. Now, I wonder, can we then apply that sort of thinking to other industries, to other businesses? Eskom already does it with their negotiable contract agreements. I've looked into this on our radio show as well, where they locked into, if I remember correctly, there was a particular smelter owned by South 32, and that smelter business was locked into a preferential agreement, preferential procurement agreement for electricity because of how much they contribute towards the economy. Is that something we could look at from a business perspective and say, if your business employs X amount of people or more, or contributes X amount of rands or more directly to the economy that we can see, whether by way of taxes or whatever it is, then you are then allowed or entitled to sort of preferential contracts in the form of lower lease agreements and all of that, because we have the land, right? So, and that's another comment that came up with the Kalani thing, is we actually have the land. So use the land. If you can put a business on a piece of land for R1, so that business actually succeeds and is sustainable, should we not be looking at those kinds of evergreen contracts and those lease agreements that are very flexible for businesses or for sectors that contribute so much?
So yes, I mean, the problem, of course, as we know, is that the cadres are going to come and eat. But aside from that, as a challenge, I don't have a problem with leasing land for R1. And if the argument is jobs, well, then let's have an open tender, because you and I could go there. I mean, how many jobs could we create if we paid R2 and doubled their lease? I mean, that Kalani lease just smacks of, he has a quick little backhand before the laws change. Is there, and we see it in places like the economic zones. We've got the Kuche, we've got the Durban one, Dubai Trade Port in Durban. It's just outside Durban by the airport, where you do get special benefits. And if you're the IDZs, if you come here, your tax rate is whatever, etc. We do it. It needs to be carefully regulated, because it can go horribly wrong.
Should we do more of those? The IDZs, the industrial development zones. I mean, we've got countries we've got areas like Dubai and the UAE that have
Zhangzhang in China.
That's it. A lot of places around the world have these special economic zones where you can set up a business. It's effortless. It's easy. It's tax friendly. We don't charge you for certain things. We give you all of these concessions because we want you to come and set up the business there, because it'll have additional benefits. Should we be doing that for South Africa? And if we do we make it sector specific? What are the key sectors that South Africa needs to grow? We're a mineral intensive country. Perhaps we should be leaning into that.
To that benefication story.
Yes.
Why don't we make a part of, I don't know, Loop Street in Cape Town? If you are a jewelry maker in Loop Street in Cape Town, you get a cut. I mean, something
you don't pay taxes for a certain period of time.
Yeah, I mean, stuff like that. I mean, I do think, and the thing with IDZs is people hate them because, like, they call them white elephants. The problem is you've got to build it first, then they come, and it takes time. And I've been flying into Durban forever. That airport was 2010, I think they built it, 15 years, and you slowly see things starting to happen. It's not an overnight thing. It's a multi-decade thing. But it does work.
So other things, I'm thinking about the Department of Home Affairs. The Department of Home Affairs obviously launched those visas that you and I spoke about
Yeah,
on a separate
and those are
episode.
working.
And those visas, that seems like an incentive in itself to say, if you're a particular company coming to do a particular service in this country, like hosts, meetings, conferences and things, a meets visa easier to get, electronically done, fast-tracked through, so that we can attract that type of business more and more.
And in those visas, so this morning the Business Day was talking about it, and here they're talking tourists.
Yes.
Additional
The
25,000.
stages visa.
Yeah. 25,000 extra tourists from India and China who just came and spent money and looked at things and yeah. No, and it is things like that. And I mean, 25,000 is not a game changer, but it certainly is a change in the right direction.
So I like those incentives for attracting foreign capital. We don't have a real problem in attracting foreign capital, right? How do we use those incentives for local development? Because there's local talent, there's local businesses here, there's local people with ideas here. But as we said, a huge part of that is the funding gap to say, I need 100 or 200,000 Rand to start my business. And the bank's going to say, well, you're a high risk. We're not going to give you that money. Should we, and again, this is sparked by Sai and his ingenuity, not by me, just came to my mind as I looked at him and thought, Sai keeps mentioning the SARB premium. Remember the 3.5 or 350 basis points of premium that sits between what the Reserve Bank lends to the commercial banks and what the commercial banks then lend on to us? That premium there. Can we take 100 basis points out of that premium there, carve it out as a fund in itself, in that whatever we were going to make from that 100 basis points, or what banks were going to charge from a retail consumer perspective, can we do something from that perspective that would unlock some capital?
And that's
or reduce the banking reserves, because they're well capitalized.
And that's a cunning way of doing it. I mean, again, it goes back to most small businesses will fail. We need to be comfortable with that fact.
That's it.
And there's other thing. I mean, part of it is money. Part of it is just resources, like an office, like a or a place to manufacture or something like that. It doesn't always need to be cold hard cash. It can be, in the case of South 32, can just be cheap electricity. Or in the case of golfers, cheap land.
So in the case of something like special economic zones, perhaps we say that each company in South Africa that has a certain threshold of earnings or whatever in a year pays a 1% tax towards this particular fund or the transformation fund or whatever we want to call it, right? And that fund then goes around and intentionally builds artisans' workshops. You build like a workshop studio. Anyone can come in there free of charge. It's got Wi-Fi, it's got internet connectivity, it's got machinery, it's got all those sorts of things. And people can come and learn a skill. People can come and develop a product. People can come and do those things. That kind of economic zone there it won't create a job for you, but it'll allow you to acquire a skill that you can use somewhere else. Is that something that would benefit South Africans, or do we need more direct injection into the economy, and how do we attain that?
So, I mean, direct injection is great. I'm just not sure that it depends who's injecting and how it's managed. Again, it's the risks of where does the money end up going. But direct injection, always a great thing. More money coming in is a good thing. Again, the risks associated, we get that. It comes back to who's doing it and who has the excess capital and the capacity to do it. If you remember the banks during the pandemic, and they had all that, they had 200 billion of loans to give out, and they just didn't give it out. Now, partly it was people didn't apply, partly the banks just couldn't manage it, because what it was is that part of the default would be secured by the government. So in other words, you could lower your risk premiums or your risk profiles, and it just didn't work.
So this brings up, as you mentioned, the government side, brings up the conversation around whether or not we can spend our way out of this problem. So I think from a financing point of view, there is enough money in the South African ecosystem, whether it's private capital, public capital, businesses local, businesses offshore, whatever it is. I think there is enough money in the South African ecosystem to be able to help us meaningfully get back above 2, maybe even 3% GDP growth. Now, the deployment part is what's the frustration, I suppose. And I guess that's where we're trying to solve for that, is how do we deploy effectively and efficiently so that we can actually see this change.
Yeah. And that is how that's just it, right? We unlock that,
Hmm.
then the rest surely starts to happen as soon as we unlock the ability to do it. And we've had, ministers for small business and, yeah.
Let's put it out there. Let's put it out to our community because problem solving sometimes requires some help, and perhaps we can achieve this solution together. Give us your thoughts. If we were to say, for example, have 5 billion rand set aside by the government of South Africa to be matched by a 5 billion rand from the private sector or whatever it is. Let's say there's 10 billion rand out there that should be used to stimulate the South African economy such that we actually achieve tangible outcomes and results. We hold people accountable where people need to be held accountable, and we actually get economic growth back on track so that the people of the country can benefit. How do we do that? How do we get that done? Where do we put the money? What restrictions do we put on the money? And how do we achieve this together so that there's responsibility, accountability, growth, and meaningful impact?
Yeah.
That's it. That's our thought. We'd love to hear your comments around that. So drop us comments, drop us your suggestions in our communities, and we'll see if we can come back with some of those suggestions and see which of those suggestions make sense. But for now, that's where we're going to leave the deep dive. We're going to get into investor insights. We're going to look into some more peculiar developments in South Africa, and we're going to add an unfiltered opinion of the week. So stick around for that. And we wrap things up with our investor insights. We are diving into some ghost contracts that we found this time around. The Government Pensions Administrations Agency has agreed to pay just under R1 billion into what appears to be a fictitious agreement to lease a building for its headquarters in Pretoria for the next 10 years. Now, this is interesting because the GPAA administers the pension assets of government employees. So you're now dealing with pension money signing into this agreement. Apparently, the contract has some serious irregularities. The company that won the tender has no access to the building. So the building itself is owned by a listed company in the form of, I think it's Attack, if I'm not mistaken. It is based in Brooklyn. It's the Brooklyn Mall, owned by JSE listed Attack. And the company that has won the tender to provide the leasing service has no authority to lease out that building, it seems. And we're talking about R1 billion here over 10 years.
I got two thoughts. First was I went in. They had the actual the specs for the leasing, and I love the detail. Got to be 500 meters away from a public transport hub, etc., etc. But gent, this is simple. It's a ghost building for the ghost workers. Problem solved.
Quickest solution to everything.
So it really is. I mean, it goes back to what we were talking about a moment ago. Rule of law. How hard is it to make sure that actually they own the building? I mean, just they own the building.
Due diligence when you award...
Like no one walked through the building?
Even if you didn't walk through it, I think if you're going through a tender process and you're saying, this is our preferred bidder to deliver this service...
Well, the documents required that you prove ownership.
That's it.
So they obviously...
Fine. You can't prove ownership. Proof that you have a lease agreement in place with Attack that affords you the ability to sublease. Because that is the simple method here, right? So things that should be making sense don't really make sense. And you can't help but wonder... I mean, how does this all work? Because this isn't the only example of this sort of agreement in place, right? Last week,
it goes back. I mean, there was one that jumps to my mind. It was with Becky Kele and a police building in Durban 15 years ago. And here we are 15 years later.
Still nothing's happened, right? It's weird because...
And then the AG catches it and the Attorney General jumps up and down and gets all upset. And
then nothing really happens, right? So how do you now deal with... I suppose this is an age-old problem we faced in South Africa. Ghost employees, much less ghost contracts, the implications of those on the economy, on the ecosystem. I mean, there's other conversations that are happening at the moment around the IDT and irregular expenditure there as it relates to their CEO. Peter Louis Meyerberg's been following that up from the Daily Mavericks perspective. That speaks to a lot of... Challenges is the nicest word I could find to describe that in the South African economy, in how things are deployed, in those that are charged and tasked with doing the responsible thing on behalf of everybody else. Now, especially when you're dealing with pensioners' funds and you're dealing with government employees' monies, right? Surely there should be an added level of accountability around that.
Absolutely should. It's also important that we assume that this building is actually needed and, well, they're not going to get it because, well, oops.
Now, when they don't get it because, well, oops, and you find yourself in a situation like the Joburg Deeds office that's still functioning quite difficultly because they haven't been able to work from their building because of occupational health and safety regulations. How long do these things go on for? How long do we let this thing happen, not fix the problem, have inefficient service delivery, and then come back and say, oh, but we couldn't deliver on our targets because we didn't have the service delivery in place? How does that make sense?
It doesn't.
It doesn't.
It doesn't.
It doesn't.
Comes back to accountability, Jen. Just, I mean, like, I
Just
know I'm
plain
sounding like
accountability.
an old man shouting at the clouds. Sometimes I am an old man shouting at the clouds.
I can see you standing outside just going, why? And then walking back inside and finishing your coffee.
It happens.
Well, we don't have the answers, I guess. I mean, we've spoken about the answers, whether or not the answers are legitimately going to be put in place, going to be used. That, I suppose, remains a conversation for another day. But we are going to have to cut the show a little bit short. Before we do, we're going to have to leave you with an unfiltered opinion of the week because, well, we can't leave you without one. This week's unfiltered opinion is more of a question, a conundrum that perhaps we can all solve together. And it is this. What is it about golf that makes many rich people love playing it at some point in their life? Is golf a rich person's sport?
Isn't it, was that book, A Long Walk Spoiled?
A Long Walk Spoiled. Huh.
It's one of the golfers' biographies. I don't know the answer to it. I don't play golf because I'm not rich. I got a bad knee, a bad back, and an even worse hook. So...
It's all the running you used to do when you used to do the comrade side. So those golfers out there, please share your unfiltered opinion with us. What is it about the sport that attracts so many people, that has people willing to spend half a day on a golf course, if not a full day on a golf course, to hit a ball into a hole? Or why is it even called the toughest sport in the world? We'd love to hear your thoughts around that. And should we take up golf? Is it worthwhile? Is it something that has that much in it that someone should perhaps say, hey, go become a golfer? That's the unfiltered opinion of the week. We'd love to hear your thoughts on it and your experiences around it as well. But until next time, investing isn't hard. Just try it.